YouTube, what's going on? Welcome to the latest episode of the Silver and Gold Stack Attack. As always, a quick thank you for taking some time out of your day to check out the latest video. And hell yeah, for being the best damn community here on YouTube, without a doubt. So before we get started, I'd like to do a quick channel shout out too. Yep, Liberty Bleeds Silver. Great dude with a really nice channel, so be sure to give him some love. Alright, so today I'm going to go over 3 realities of silver stacking that some stackers just seem to forget or ignore altogether. Now, as always, this is just an opinion piece, so it's cool if your thought process doesn't line up with mine. We're all here on YouTube to share thoughts and exchange of ideas, so be sure to leave a comment after the video. And all that said, buckle up and let's rock. Alright, the first reality I'm going to cover is a simple one, but I see it happening all the time. And that reality is this: can you afford to stack precious metals? Now, I'm not trying to be holier than thou or uppity, but let's face it, stacking is going to consume quite a bit of your disposable income, right? So you need to be prepared by having as little debt as possible. Now, why is that? Well, here's one example. If you've racked up a ton of credit card debt and you're just paying the minimum and still buying metals, I hate to say it, but you're being counterproductive. Minimum and small credit card payments most times won't even keep up with the interest being charged each month. I've seen far too many stack like maniacs without paying off debt, and then, bam, they ended up having to sell off their entire stack because their total debt was crushing them.
Sooner or later, get the squish, just like grape.
Yep, just like grape. And that's the exact meaning of counterproductive. Now, I'm good friends with a fellow stacker who realized he wasn't making much headway on paying off his credit cards and stacking, so he took a percentage of his stack, sold it, and he put that money toward reducing his overall monthly bills. That is an amazing thought process, and the fact that he recognized he needed to do it, well, that shows he's got his head on straight. He'll pay off that debt and refocus his newly freed up money to rebuild the ounces that he sold off. Smart. That's smart stacking. Bottom line is this: you need to have as much of your debt paid off before you become a full-fledged stacker. Next reality is that silver in its present form is a lousy quote-unquote investment. It just is. It's volatile. The price rises and falls inexplicably at times, and it was never really meant to be the equivalent of a cash flow. It doesn't pay dividends like stocks. In other words, silver's probably not going to make you rich as long as the price is manipulated by the accepted spot price. And that keeps silver controllable, right? So when you go to sell it, it's highly likely you'll get back, I don't know, it varies by shop, but you'll probably get $1 or $2 above spot for stuff like Eagles and Libertads. But I have seen Eagles bought for spot, so nothing's guaranteed. You might get spot for Maples and Britannias, or just back a spot. And definitely back of spot, or barely on spot for everything else, like your generic silver. And it depends on what silver price is doing. Now, those premiums that you paid, irrelevant. Completely irrelevant, because your silver is only worth what another person is willing to buy it for, right? That's a sobering thought, but it is reality. Silver is a physical, tangible asset. And it's a high probability that it'll never become worthless. So it's far better than saving the paper dollar that loses purchasing power pretty much each year. It stands to reason. It keeps up. It barely keeps up with inflation, but it does keep up with inflation for the most part. And it's just, look, I'll take silver. I will trade worthless fiat bucks for tangible physical silver all day. And the third and final reality. This is a tough one, but stackers need to understand the true nature of silver spot price. Spot price, simply defined, is a base price that primarily fuels the markets and not necessarily silver price itself. Now think about it. How many times have you been able to buy silver at spot price? We wish, right? Maybe even a few times you've gotten lucky, you found a deal on something. But I'd say it probably doesn't happen often, and the majority of us likely don't have that luxury pretty much ever. That's because the coin shops use that market-based spot price, tack on what they paid for the silver itself, then add a premium, which you end up paying. Now, a good example is Silver Eagles. The mint sells them to APs, or authorized purchasers, who tack on a premium to make profit and then sell it to the dealers. And then the dealers turn back and they tack on their own premium to recover what they paid and make money on the deal. Hey, they're not in business to cut you deals all the time. They're in business to be a business and make a dollar. The minute you walk through that door and that bell rings, you have to understand that going in. He may give you a deal. He might give you a deal, but for the most part, he's got to make his money. So it is what it is. If we could buy directly from the mint, like for Eagles, we'd save money by cutting out that middleman or the APs. But since hardly any of us are authorized purchasers, the only folks that can buy from the mint directly, the mint's not going to sell bullion Eagles to us, the general public. Just special edition Eagles, proofs, limited, whatnot. So we need to have a full grasp on what spot price really is, and that's a base price primarily aimed at the markets, specifically paper silver or ETFs. ETFs are made to move constantly and instantly, and investors love them because they don't have to store physical silver. Now, I personally do play around with silver and gold ETFs. I wanted to get some exposure to them on the markets, but I would never recommend them to anyone who hasn't done their due diligence. So with all the negativity against silver, why are we even bothering? Why are we stacking this stuff, spending our money on it?
Are you crazy? Or just plain stupid?
Stupid as stupid does, Mr. Blue.
I guess.
We hear it all the time. Silver doesn't make gains. It moves like molasses in the wintertime. And some wish they'd never bought it in the first place. It's frustrating, right? Yeah, sure, if you look at it that way, it does appear that even over the long term, that making gains on silver is a pipe dream, since we have to calculate inflation or the dollar's loss of purchasing power from the time that we bought silver to present day when we're ready to cash in. We also have to consider the premiums and taxes in some cases that were paid during that initial purchase. But if we just keep expectations for silver to a minimum and stack it for what it's best suited for, we'll have more peace of mind and worry less about obsessively watching a spot price like your life depended on it. If you're stacking for the long term, you really don't have to follow spot price for anything other than curiosity. So what is silver best suited for? Well, a couple things. It's a fantastic savings account, seriously. That'll hold more value in the future than stashing dollars in a low interest rate bank account. Second, when all the numbers are said and done, it does tend to keep up with inflation to an extent. Far better than the dollar, for sure. And lastly, silver all is a plentiful commodity for now. There's a lot out there, but the mined above ground shortages are a real thing, with deficits in the millions of ounces. And with technology moving on and silver being consumed at the rate that it is, at some point, that status of plentiful could eventually become critical. So a lot of stackers are pinning their hopes on the day that silver finally reveals its true worth and steams ahead to triple digits. Now, problem is, a lot of us probably won't be around when that time comes, so let's just play the silver game for what it is, a physical, tangible asset that makes a fantastic savings account and somewhat keeps up with inflation. If it blows up in the future, that's awesome, right? I'm not saying it can't hit triple digits. I'm just saying it's probably not going to be soon. All right, we're going to have to wait on that day. We don't know how long it'll be. Nobody can predict it. It is what it is. When it happens, if it happens. But just temper your expectations for your silver, and I guarantee you'll be far less stressed out about it. Let your overall portfolio of investments make your money for you. That's what it's for. And don't depend on precious metals. Silver, buy it, enjoy it, and stack it away till you're ready to unload it and complete your exit strategy. Never invest in silver. Save in silver. All right. There you have it. Another one in the archives. Hope you guys enjoyed that one. So, what does your silver mean to you? What are you stacking it for, and what's your end game? And are you keeping your expectations to a minimum, or are you praying that silver shoots to the moon, or both? I'd love to hear your feedback, so be sure to leave a comment down below and let me know. You guys know I love going through them, so make sure you sound off. That's going to wrap it up for this episode of the Silver and Gold Stack Attack. And if you made it this far, well, kudos to you. I'll definitely catch up with you in the next episode. But in the meantime, oh yeah, you know what's up.
What do you want to do with your life?
I want to stack. Damn right, get stacked. Stay safe and be well, everyone. And be sure to catch me at my silver journey this Wednesday at 8:30 for Stacker's Corner. If you need a link, just look under my post. But until then, I am out of here. Peace, folks. Have a fantastic week ahead. Take care.
You're still here? It's over. Go home. Go.